Everybody, today we're going to be talking about when Roth conversions hurt more than they help. In this video, we're going to talk through how you would do a break-even analysis to understand what the actual cost of doing Roth conversions is. Roth conversions are basically when you take tax-deferred money, meaning money that's been contributed to an IRA or a 401k where you don't pay the tax in the current year, and then you convert it from that tax-deferred status to Roth status, which is tax-free money, where you pay the tax in the current year. And basically what you're doing is you're incurring a present day cost for a future benefit. And so we have to do what's called a break-even analysis to find out how long does it take to actually pay off to make that decision. And the case I'm going to make in this video is that even though Roth conversions are frequently used as kind of a sexy retirement planning tax strategy, and in some cases they can be, it's very important to know how much it's costing you to get that benefit and when that benefit will actually apply so you don't make decisions that hurt your retirement plan. We're going to bring a few items up on the screen here. We're going to show a model financial plan here. In this financial plan for this hypothetical client, they would be retiring in the next year. They have a pool of about $500,000 of retirement assets in liquid form. And in this plan, the plan shows that the Roth conversions are actually a desirable strategy, that this person would end with almost $82,000 more in end-of-life wealth through the use of Roth conversions. So this is kind of a sexy screen. It would lure someone into potentially doing these Roth conversions without enough context. If we tab over to the next screen, this would show that if this person followed this Roth conversion strategy, they would end their life with 100% tax-free money. Again, a very attractive lure because the perspective of paying no tax or even leaving your money to heirs tax-free is very attractive. The question here is, what is the cost of doing this and how would it affect this person's life during their actual retirement years when they're spending money and drawing down their portfolio? And that's what I'm going to try to illustrate here. So we're going to pull up a spreadsheet and we're going to look at the different break-even points so that you can understand. So we pulled up a spreadsheet on here and on the screen here, and this shows a table of this person's Roth conversion tax amount paid each year. This person would be recommended by the financial plan to do Roth conversions in the first 5 years of their retirement, from ages 69 to 73. What we have here is a comparison of the total amount of tax paid in those first 5 years of retirement. The first column here is taxes paid if they do Roth conversions, and the second column is taxes paid if they do not do Roth conversions. The key thing to know here is, like we said at the beginning, Roth conversions, you're taking a future expense. In a tax-deferred account, you would pay taxes at a future date, and what you'd be doing with Roth conversions is pulling forward those taxes so that you pay them now, thus avoid paying taxes in the future. So what we have here is a little chart that shows that the total tax paid if you do those front-loaded Roth conversions from age 69 to 73, you would pay a total of $153,000 in tax. If you do not do Roth conversions, you end up paying $58,600 in tax. The delta or difference there is $94,000. That's what you call the cost, upfront cost of doing those Roth conversions. Effectively, what's happening is you've reduced your spendable assets by $94,000 in order to get the benefit of the Roth conversion for the rest of your life. The way we have to evaluate this is say to ourselves, well, how many years of additional tax payments does it take in order us to break even for paying that $94,427 upfront? Well, here's the rest of the grid, and you can see that below. This continues showing the tax paid in a Roth conversion scenario versus a no Roth conversion scenario side by side. And after having applied a formula and doing some math, you can see here that by age 84, this person retires at age 69, by age 84, they will have broken even the cost of their Roth conversions. So that's an additional 10 years into retirement after they performed the Roth conversions is the first year in which, it's really 11 years, is the first year in which this person actually breaks even on the cost of their Roth conversions. Now, this doesn't mean it's a bad idea or a good idea to do Roth conversions. Here's the calculus you have to apply in this scenario. Doing the Roth conversion pulls forward a future expense. If you're someone with a constrained pool of assets or a smaller pool of assets or a high cost of living, let's say you still owe money on a house or a mortgage in retirement, or let's say you are obligated to support family or loved ones in retirement, and your expenses are higher, Roth conversions take a later cost and bring them forward and will reduce your spending flexibility earlier in retirement. And so you might say, hey, if I have to sacrifice my health, my vigor, and my youth in retirement and live on a more frugal budget, the Roth conversion might not be worth it to me. Now, the other side of this is if you are not spending constrained and you have maybe a larger pool of assets, and maybe you know, or you're very confident that at end of life, you're going to leave your heirs a significant or sizable pool of assets in tax-deferred status, which is not good for heirs, You might say, yes, I'm willing to spend more at the front end of my retirement in order to get that benefit later in retirement if I live that long. But more importantly, when I pass for my heirs, the main benefit to heirs is if you pass with money in a Roth account and that transfers to your heirs, they are not obligated to pay the taxes over a 10-year distribution rule if it's a non-spousal beneficiary. And that is a sizable and significant estate planning objective. The main thing is we don't want to be blindsided into blindly doing Roth conversions just because the retirement plan tells us that it looks good or just because we see an 100% tax-free dial. We really need to understand what the cost we're paying is, what that sacrifice in present day standard of living is, and then make an informed decision. I hope you found this evaluation helpful. I hope you'll apply this to your own retirement planning efforts. And if you do have questions or comments about the information shown in this video, you can leave those in the description below. You can also find all sorts of helpful guides on our website at www.thepeakfp.com, including guides like a sample financial plan, a 3-bucket strategy, asset allocation guides, and all sorts of things like that. Thank you as always for your time and attention. And if you would like to reach out to our fee-only fiduciary financial planning team for your own retirement planning needs or just to have a discussion, you can schedule a free consultation on our website at www.thepeakfp.com. Again, thank you for your time and attention, and see you in the next video.